With returns of over 15% year to date, it's one of the strongest performing asset classes so far this year. I'm talking about gold. Gold is hitting record highs, and with me today is fund manager Guillaume, where we will talk about all things gold. Guillaume, gold seems to be in a real sweet spot at the moment. I saw last week it hit over $2,400 per ounce. Why are we seeing gold prices hit record highs right now?
Hi, Nicole. Yes, we've been talking a lot about equities. We've seen strong returns this year on the equity front, 6.5% year to date for global equities. But as you said, gold actually has outshined this with a 15% return so far this year. And that's not just gold. We've seen strengths around broad commodities, oil as well. But the fact that it's holding on to record highs is very strong. We think it's likely supported by a variety of factors. There's potentially some resurgence in inflation concerns from the investor community. We've seen obviously the increase in the number of sort of geopolitical flashpoints around the world at the moment, which is quite concerning and sort of maybe pushing investors towards the safety of gold. And possibly, this sort of question around the US debt sustainability, very high level of US Treasury issuance in the US. So, is the US Treasury bond really the safe haven that it used to be?
Right. Okay. So it's that sort of flight to gold as a safe haven or safety, given the uncertainty. Now, what I found interesting, though, is that typically, if long-term yields increase, we would see the price of gold decrease. But that convention doesn't seem to be holding right now. We are seeing, long-term yields going up and gold is going up and the US dollar is strengthening. So does that mean that these old correlations are changing?
Yeah, certainly, definitely something that's caught our eye. It's very interesting that, when US Treasury yields go up, typically gold will tend to go down because it pays no income. And also because it's a commodity, it's priced in US dollars. So, when the US dollar is stronger, usually commodities are a bit weaker because the US dollar tend to be a risk-off currency. And we're not seeing those sort of usual relationship playing out. And that sort of brings us back to maybe that inflation point where, inflation prints in the US have been slightly higher than expected over the last few months. Nothing too concerning, but still a bit of a disappointment in terms of potentially interest rates coming down. And maybe, but at the same time, the Federal Reserve still wants to cut interest rates. So maybe investors are sort of sniffing the fact that maybe there might be a policy error at play if the Fed is not necessarily reacting to the inflation threat. That could certainly be an explanation. But, it's also come down to high level of government debt. And that's just not a US problem, actually, in terms of high fiscal deficit, high debt issuance around the world, really is also definitely a driver there.
And we're probably seeing supply and demand playing a factor here too, are we?
Yeah, at the end of the day, it always comes down to supply and demand, in terms of what's driving price action. And central banks have certainly been buying gold over the past few months, potentially reducing their US dollar exposure because of, US sanctions sort of increasing in some regions. And so it's a diversification move. And also what's important is to remember that those typically central banks and the official sector, they tend to be long-term holders of gold. So, it's permanently removing supply, and they're not going to be driven by the fact that it's gone up. It's really price-insensitive buyers. Okay.
And I guess a final question for you here. What should investors keep an eye on with respect to gold as an investment?
So I think looking forward, if you think that interest rates are going to keep rising, we think interest rates already moved a lot, but, there's going to be a point where it's going to have to impact gold, because you will get better compensated for that inflation risk through treasury bonds than gold, which, as I said, doesn't provide any income. So maybe that's one of the drivers that you keep looking at is what interest rates are doing. Obviously, geopolitics is a big one as well. You could argue if there's inflation concerns, maybe gold is better to hedge that geopolitical risk than government bonds, which value might be impacted by inflation. And you've also got the US election ahead of us, which also could be a bit of a curveball. So lots for investors to rush to safety at the moment.
Great, thank you, Guillaume. Some call gold a pet rock, but this pet rock has seen a 6,500% increase since 1970. So not too bad for a pet rock. Thank you, Guillaume. Thank you all for watching, and join us again next week for another topic that's caught our eye.